We've got, as we were talking, we've got the shortages and the squeeze in the paper market and the lack of liquidity, which is driving the price. I mean, I can see silver actually going more rapidly than twice as fast on the upward direction as gold. I would expect to see silver outpace gold, certainly until you get the silver gold ratio down to somewhere between 30 and 50. I can't be more precise than that. I think I would probably reassess the position. I really do think that silver has a role to play here. And in the very, very short term, there is no doubt that this ESG rubbish is creating enormous demand for silver. There is no supply there. And on those grounds alone, it's going to drive silver a lot higher. And it's going to break the market.
The silver market is experiencing significant shortages and a liquidity squeeze, pushing prices to new heights. Alasdair Macleod, a prominent figure in the precious metals market, notes that these pressures contribute to a rapid rise in silver prices, with some speculating that silver could outpace gold even faster. On Friday, April 12th, silver prices approached the psychological barrier of $30 per ounce for the first time since 2021, reaching a three-year high of $29.80 amid escalating geopolitical tensions between Iran and Israel. In the trading session, silver climbed 2.3%, hitting a 9-day high after breaking above $30 near the end of the session. This increase in silver prices also spurred a delayed but noticeable rise in gold, which saw a 0.6% increase ahead of the European market opening. Macleod, who holds substantial amounts of silver, anticipates that silver will continue outperforming gold until the gold-to-silver ratio drops between 30 and 50. At that point, he may reconsider his position. Currently, silver is facing intense pressure as the gold-silver ratio rebounds towards the 78.50 level. According to Macleod, the demand for silver is not solely driven by market liquidity issues. Despite a limited supply, ESG, environmental, social, and governance factors, play a significant role in bolstering demand. Silver is crucial in the green energy transition, particularly in producing photovoltaic solar panels. Each solar cell uses approximately 111 milligrams of silver. While thrifting has reduced the amount of silver needed in solar cells, analysts suggest that this trend has stabilized, and further reductions in silver usage are unlikely. Join us as we delve into Alasdair Macleod's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Silver is not priced as money at all. It's not valued as money. I mean, if it was valued as money, we'd be looking at a gold-silver ratio back in sort of, Sir Isaac Newton's levels, sort of 15 times, whatever. So it's definitely not. Yet, the thing that's fascinating is that when gold runs, silver runs twice as fast. So it does have this sort of moneyness, if you like, inside it, even though it is not priced as money. Now, on top of that, of course, we've got, as we were talking, we've got the shortages and the squeeze in the paper market and the lack of liquidity, which is driving the price. I mean, I can see silver actually going more rapidly than twice as fast on the upward direction as gold. So, for people who can stomach a little bit of risk, and there's no sort of extra return without some sort of risk, then it actually could be a good way of getting to gold. Go via silver. If you can take the risk, go via silver. I would expect to see silver outpace gold, certainly until you get the silver gold ratio down to somewhere between 30 and 50. I can't be more precise than that. At which point, I think I would probably reassess the position. I personally have quite a bit of silver for that reason. I want to get as much leverage on the gold thing without going to a bank and saying, look, here's my collateral. No longer got it. I don't want to go into that game. No, thank you. I really do think that silver has a role to play here. And in the very, very short term, there is no doubt that this ESG rubbish is creating enormous demand for silver. There is no supply there. And on those grounds alone, it's going to drive silver a lot higher. And it's going to break the market. So this is something actually I'd be very interested in your view. What I see is after 40 odd years of paper markets, and the actors in those markets being entirely used to a situation where delivery never really takes place. And it's just credit. The whole thing is done on credit. It's a mountain of credit, which can be expanded, contracted, whatever. We're now in a situation, I think, where that credit is now being encashed for physical. This is really what it boils down to. I mean, we see the deliveries on COMEX, which is never meant to be a delivery market. We see how this stuff is being drained out of the West into Asia. So we're looking at, I think, a potential crisis in the paper markets, which could actually take out the bullion banks.
Alasdair Macleod highlights that the United States is grappling with significant challenges in maintaining the dollar's global dominance amid its escalating debt issues. He suggests that a potential dollar collapse is not a question of if, but when. Adding to the concern, the International Monetary Fund has warned about a striking decline in the U.S. dollar's share of allocated foreign reserves held by central banks and governments. This shift underscores the growing uncertainty about the dollar's future as the world's primary reserve currency. President Joe Biden is contending with rising inflation and a weakening economy, which Alasdair fears could lead to stagflation, a combination of stagnant economic growth and persistent inflation. Historically, such economic conditions have led politicians to deflect blame onto foreign adversaries and implement measures like price controls, which often prove ineffective. Recent reports from the Federal Bureau of Labor Statistics provide a mixed picture. The annual inflation rate fell to 3.3% in May, down from 3.4% in April and 3.5% in March. President Biden hailed the latest inflation report, which indicated that consumer prices did not rise in May compared to April. This marks the first time since 2022 that U.S. month-over-month inflation remained flat. Prices are still too high, but today's report shows welcome progress on lowering inflation, Biden said. Let's get back to the interview.
I mean, the Europeans now talk freely of sort of, if you like, national service and sending troops along with weapons into the Ukraine to fight the Russians, supporting the Ukraine in attacking Russian installations and all the rest of it. This is escalating to the point where it risks really getting out of control, and then this is just horrid. And I think also from President Biden's point of view, he's on very much a slippery slope when it comes to the elections, the presidential elections in November. And, what do politicians do? I mean, when things are not working domestically, and I think by then inflation will have started, measured by CPI, it'll be rising again, and the economy will be tanking, stagflation. This is the initial thing. I'm convinced that is what's going to happen. So what does Biden do? Well, under these circumstances, politicians always do the same thing. They go and attack foreigners and say, they put the blame on foreigners. He'll probably introduce price controls and all the rest of it to stop inflation and so on. We know this doesn't work. He knows it doesn't work, but it doesn't stop them doing it. So, the whole thing, when it comes to war with Russia and China and so on, I think we're only seeing the beginning of this escalation. This is going to continue, I think, and it's driven really by self-deception in the West. We're deceiving ourselves, for goodness sake. I don't know about you, Andy, but, I look at the Telegraph every day and the reporting in that is so mainstream, and it's obviously very much in line with the intelligence services, with Westminster as well, as well as Whitehall, and this is really showing us that we've completely lost the plot when it comes to understanding the geopolitical situation. We're desperate. Americans are desperate. They don't want to lose the dollar's hegemony, but they are losing it, and this is going to destroy the dollar. People keep on telling me that interest rates have got to go easier and all the rest of it. I agree with that in a sense, if we had the opportunity. But the reality is that America is trying to fight a war with a debt trap. It's in a debt trap. It rolls up the interest. I can easily see U.S. Treasury bonds, priced at sort of 10 to 15 years out, looking at 15% and more. What's that going to do? I mean, the dollar is going to collapse. The question, I don't think, is will it or won't it collapse? It's when. That is really what we're now seeing. We're coming towards an end game, and we can see this rising. So it's a very dangerous situation. And you and I think, are really in the business of trying to help people understand these dangers, educate them, if you like, when they need educating. Most people, I think, actually do have an inkling of what these dangers might be, but they're just not aware of it. And we have to work our way around all the propaganda, which, basically says otherwise.
Given the significant challenges in both the silver and broader financial markets, including the potential collapse of the dollar, rising inflation, and silver's critical role in the green energy transition, what strategic moves do you believe investors should consider to navigate this complex landscape? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.